Hey traders, Raghee here. Happy Friday, everybody. Happy non-farm payroll Friday. Hope everyone is doing well. Got a lot of interesting action going on, and usually the question that I get a lot of is how is the market going to digest non-farm payroll? And I'm going to stick with the same approach that we have been talking about since the Federal Reserve sort of ratcheted up the conversation about eventual taper and about rate hikes and looking forward to 2023. Every data point that involves growth, inflation, and jobs are going to have a disproportionate, and really you can look at any kind of economic headwind. All of that is going to have an effect on the messaging the Fed gives the market in terms of their trajectory, their timeline to eventual action. And when you get a number like non-farm, that really, it's a big number. I mean, take a look. You've got the average hourly earnings ticking up and better than expected, but in line with previous. You've got non-farm payroll, again, far higher than previous and far higher than expected. You've got the employment rate ticking down. Now, all that seems like good news. Not all corners of the market are going to perceive this as good news, especially much more interest rate sensitive indices, really like the NASDAQ. So don't be surprised to see the NAS weaker. S&P is probably going to be flat because it's caught in the tug of war between the NAS and the Dow, and the Dow could actually be benefiting a little bit from this. So 3 indices, 3 reactions, and that's pretty much been the way the markets have been responding to these key market data points that the Federal Reserve is going to be using mostly to determine the way they're going to message their monetary policy and how quickly we can anticipate, again, taper and eventual rate hikes. So non-farm payroll, kind of a big deal, and it makes today a caution day for my day trading. Now, before I get to the questions, let me mention a couple other things. First of all, if NAS is going to be weak because of interest rate sensitivity, if we get a pullback that is sizable enough, and I don't have a problem with a VWAP buy or even a 21 EMA, which I would prefer. I don't see either likely happening today, but I will be willing to be a participant there. Speaking of 21 exponential moving averages, today with the movement we're seeing, bonds are back in play for us. Remember, we've been rolling higher. And if you don't know this, in the futures room, in the Sector Secrets Mastery, we have been rolling higher. What do I mean by that? Rolling higher with bonds. Well, we've been basically buying the dip. The last one that we bought was right in here. And I'm looking to do it, guess what, again? So as we get close to that 21 exponential prop dot, it's back in play. So that movement lower, fantastic. That's the pullback. That's the dip, because of the double green that we're looking to buy into. So we've been scaling out of that position. We're in trailing stop mode, likely going to be hit for most of us today. That's fine. We've locked in some unrealized profit. And now we're going to look to just fire that long off again. So by the way, I'll be logging into the Sector Secrets Mastery Room. I'll be in the chat with you all, probably not on the mic, but let's look at gold and bonds this morning. So let's take a look at gold. A lot of questions about gold. I no sooner put out, hey, we're in the zone. Look, I do want to mention this is below the zone, but it's still something that's very interesting and bullish to me. So we've been waiting for movement lower to buy into. So you can look at it this 2 ways. And again, those of you in the Sector Secrets, we're looking at GLD. Same thing can go for those of you playing the ETF route in, well, any of the rooms. Remember, GLD is going to be active for us at 9:30. If you're not a futures trader, please be very careful playing GC. I would prefer you go the MGC, the micro GC route, options on GC futures, or wait for GLD, okay? And so in the sector, we're waiting for GLD. So when we get the bell in 25 minutes, we're going to be below our entry zone. Now, one of the principles of the sector is what would invalidate or make us at least wait is if we wake up and the entire zone of our agro, moderate, and conservative have been taken out by what's going to be ultimately a gap down. And GLD, we're going to wait. We'll talk more about this in the room, but I do actually still like the buy. I think we need to wait for a couple other confirmations, but we're finally in the zone. It's probably actually really, I think longer term, it's going to be a plus. The way it's entered the zone for us, because remember, this is really important. The last time that we bought up in here. Okay, and what did we do? We proactively took profit. Thank you, Darvis, very much at 1835, moved to break even, and then ultimately, we've been looking to get in again. So on the reentry, as we are in the zone, we'll talk more about this, but it doesn't hurt to be a little cautious, okay? But I'm still bullish but cautious. We're in the zone this morning. I'll see you guys in the room at the bottom, at 20 after the hour. Okay, so I know we're going to get those questions about gold. Again, it's just really important that when you have a market in a range, that you respect the range and you start to think about where within the range do you want to engage. All right, so if you don't know how I do this, I went through this in a lot of detail. Again, we are below it, but I'm still going to be looking long. I talked about how I dissect the range in yesterday's free video at the Simpler Trading YouTube channel. Okay. All right. So let's now get to your questions. That's what I'm looking at mostly there. And let's see. First question. Will I be adding? Well, we haven't even, Antonio, remember our alert, right? Let me at least give you guys, for those of you that are not aware of what we were looking at. So let me grab the GLD. Okay. So this is the GLD setup. And one of the things I teach when you are trading an ETF that does have a connection to a futures contract, I use the futures contract as the triggers, right? So I'm not really looking at the price of GLD to get me in. I'm looking at the price of GC to get me in, December gold. So this is the way that we looked at. This is the actual alert. You guys are seeing it here now. We were waiting for the market to get to 1801 to do anything. So clearly we're below even, our lowest entry was around 1790. So clearly we're below that. So if you're in the sector room and you realize, oh, we're opening below our entire range, what's Raghee going to tell us to do? Inside day or minor low. But I wouldn't mind putting on a little bit of a position today in gold, but I would really like to see, now that we're here, terrific. This is our pitch. Just a little bit wilder a pitch than I would have liked, either minor low or an inside session, which means for some of you, you might say, well, Raghee, that means that we're not going to be doing anything until Tuesday of next week with gold. And it's still going to be looking for a buy. Okay, so I hope that kind of covers the questions. I figured we'd get some gold questions this morning. I still like it a lot. And that also means I still like to re-enter bonds on a pullback. So we'll be looking at that 21 EMA and TLT. Okay, so I think that covered some of the questions about gold and bonds and the open and non-farm payroll. So as far as gold being grand opening, grand closing, again, the GC is very different than the GLD. I've been setting up the GLD. So we can't really do anything with GLD yet. Underlying futures, look, futures are a whole other animal. The leverage makes them a little bit of a different kind of risk, okay? So James, yeah, I'll talk about GLD when I see you all in the room here shortly, okay? As far as, hey there, John, so it, Monday, Wednesday, Friday, I'm usually in the sector room and we take a look at those 0-day to QQQs and SPYs. However, today is a caution day, right? Because the non-farm payroll, clearly you can see all the volatility. Does it mean that we can't look for our signals on the V-score and on the HPMRs and the lower ends of the range? So I'll still be looking for setups, but on a caution day, and it's a Friday, I'll be trading usually smaller than normal size, and I'll be more conservative. So how do we keep from letting Friday hurt us? Or as I like to remind my traders, Friday hates traders. So what I want to do is be more conservative about the actual setups, and I will trade them with smaller size. Okay, so that's the plan with those zero dated. And Monday, Wednesday, Fridays are awesome for that. And that's what we've been doing all week. So thanks for the question. Yeah, big jobs number, Michael. Yeah, big jobs number. And that's actually, again, it's going to be sort of neutral choppy for the S&P because it's caught between the tug of war between typically the NASDAQ, which is going to be a little bit more interest rate sensitive, and good news is bad news in this market. And it's going to be slightly bullish to the Dow. So you'll end up with the S&P stuck in the tug of war, NASDAQ usually down, Dow usually up. And that's kind of the way better than expected news has been affecting those three indices. All right. So next question. Right. If you want to join our mastery, of course, the think tank, as I like to call it. Yes, for sure. You can see the link in the chat here. All right. Well, hey there, Kip. Yeah, let's take a look. So we do have a pullback. Yep, we do have a pullback. That's a nice looking chart, but here's the thing. The specific date, Kip, that I would be interested in buying is actually this candle right there, not this candle right here. Not the up candle, but the down candle sinking into the wave. And since pre-market, we're going to be up at 86.59, I need some bearish momentum sinking in the wave in order to buy the calls. But great structure. Even though it's gone mildly double yellow, I don't believe that it's an invalid trade at all. So I think there's definitely a buy to be had. And it kind of reminds me of a number of other pullbacks we're seeing, Cokes and Pepsis and things like that that are on my radar. EXPD, Clay, was on my radar. It sure was. So EXPD, I'm a little bit more interested. Look, do I want to be a buyer? Absolutely, right? So what then happens is I start to look for support. Notice what I'm doing is I'm looking at previous Darvis levels. I'm letting the Darvis do the automated support and resistance identifying for me. Because it has been yellow, usually what I'll say is you want to wait for blue grab candles because of the more, because we've lost a lot of that trending quality. So if you're looking at it today for the first time and you're wondering, well, where do I get in? Take a look at that volume ledge right there accompanying the 55 EMA. That's actually a really nice support levels. There's your volume ledge right in there. And then also take a look at the 55 exponential tucked right in there. Yeah, I like that area quite a bit for a buy in EXPD. That would make a lot of sense. So thanks for the question. All right, so what did I do? I put the wrong date for the, did I put the wrong date in? Yeah, it is Back to the Future. You didn't know you didn't know I kind of run a little H.G. Wells back here, Ron? Absolutely. The time machine is just out of focus too. Yeah, you just can't see it. All right. Next up is, why are we buying gold when red and yellow? Gold, as I've mentioned from the get, if you're in the room, and I mentioned this in the free videos that I'm doing on gold, it's not a trend following. Absolutely. I mean, no doubt. And I love that you guys are saying, Ron, what the heck? You're the one that tells us double green, double green, double green. That's true. So when we venture into non-trending markets, and there's a couple that we have ventured into, I always make that perfectly clear that this is not a double green. Probabilities and setups in non-double green markets, while often valid, are not going to be my preference for sure, because this kind of stuff can happen. So great question. I like the trend in real yields. Gold, again, took it really hard, as you can see with non-farm payroll. But again, that move has taken us down to the zone. It's through the zone. But again, because we're waiting for the market to move lower and give us an opportunity to get long, this is just a little bit more than what we asked for. We asked for a big cup and we got a supersize. So I still believe it's a viable market. It's just there are some patterns that would make it higher percentage in terms of the buy. But yes, this is not a double green, correct. And I do set up non-trending markets from time to time, but not that often. I try not to let it be the dominant market structure that we look at. Do we see any other plays of metals like copper and steel? So steel, I typically play via the SLX Steel Stocks ETF. Copper, copper is kind of interesting. Let me show you what copper did. It's a continuation, 1, 2, 3, that's landed us right back to the swing high area. So yeah, this area here in copper is mildly interesting, but kind of going back to the earlier question, it's a yellow. If I find that in my trading book of trades that I have far more yellow structured markets as opposed to the double green that I prefer, then I know I'm starting to trade too aggressively and I'm losing sight of what is my true north. So I don't mind a couple double yellows if there's a narrative that makes sense. But as a general rule, to me, copper is going to be tethered to the YMDIA. And if I don't like the longs in YMDIA, which I don't, then it's very tough for me to like a long position in copper. So that would, confirm the double yellow or the yellow lower JT multi and remind me that, hey, Rog, let's not load up the book with non-double green. A couple are fine if there's a narrative, but don't start pushing into those non-trending markets and letting that dominate my open trades. All right, so am I long gold? So Senor Crespo, why am I long gold? Well, this is we've done long gold multiple times. It started with the 1, 2, 3 trend reversal back in here. Okay, we had a nice double green environment for a while, broke the trend in here, and then this is what we're dealing with now. We're dealing with the smaller range of chop, and we also have a larger range. That range is down in here. Okay, so there's that range in there. So last time we bought gold, this is the second time we're getting inside of this range, was back in here. And then we rode that to 35. And then what do? We scaled out. We paid ourselves. And more importantly, we moved to a break even or trailing stop. Now you can see we're a little bit below where we were, but we're right back in that zone. If you watch the video from last night, you'll see how I derived the different levels. So we just got more than we asked for. That's all. So I've done this before, and yeah, I want to do it again. It's just sold off to a larger degree than I needed, right? So it doesn't really invalidate the trade. It just would actually, and again, you guys that are in the sector secrets know, and if you don't, when we gap through our entire zone, it doesn't invalidate our wanting to be long. It just means we should recalibrate. But again, we can get long, and when I'm with you guys, we'll talk about all the choices that we have. Okay? All right. So what do I think of Visa and American Express? So Visa, I actually like MasterCard a little bit better. And I think it was earlier this week, we discussed this particular zone because I mentioned, hey, if we can get down into this area, the closer we are to the 200 exponential, this is a choppy market, and this is basically oversold support. And I liked MasterCard a little bit better because of that than Visa. So that goes back to a Charts and Coffee episode from earlier this week. So Visa, no, but MasterCard, yes. And American Express, yeah, I don't mind American Express. I just need that move as close to the 55, which, by the way, is also coincidentally the point of control. So the closer we are to this area here, yes, it's absolutely a buy. I mean, yes, we've had periods of yellow like we've had now, but look at the dominant trend. Good old double green. I definitely want to be a buyer. It's probably one of the better, not the best, but it's definitely one of the better corners of financials. XLF, Morgan Stanley is really good. There are a couple other double greens that are a little bit better than American Express, but American Express is pretty affordable. Nice looking chart. All right, so with that, how do we sign up for the free newsletter? Just head on over to countdowntrader.com. One row, that's all you need to do. Head on over to countdowntrader.com. calm. All right. So that is it for today. We're going to take a look at gold and bonds, and if we get a pullback in some of the indices, XLK, XLC, XLV, all on the radar. That's what's on my radar. That's what's on my watch list. Have a terrific weekend, everybody. I'll see you Monday. Thanks, as always, for being part of the Charts and Coffee crew. Be good to each other, gang.